Welcome to your monthly market report for December of 2022. My name is Nikki Wade, and today I'm going to walk you through the most talked about topics in the housing market right now, which are mortgage rates and home prices, something a lot of people are following very closely in today's housing market. Then I'm going to wrap up by hopefully helping you answer the question, should I buy a home right now? A lot of clients and buyers are asking, is this a good time to buy a home? And while everyone moves through that process at a different pace for different reasons, I want to help you answer that question, so let's dive in. The big question, will mortgage rates keep rising? So let's start with the graph that you might have already seen that shows how mortgage rates are rising this year. This is the Freddie Mac 30-year fixed rate from January of 2022, so very beginning of the year through where we are today. And of course, this is a look back. So this was released in the beginning of last month, and what we can see is how mortgage rates have been climbing drastically this year. And they even ticked up over 7% at one point, which is causing some people to be priced out of the market, therefore putting a pause on their plans to buy, which has slowed down sales. So we understand that while a 6 to 7% rate is technically the historical average, the fact that they have risen so rapidly is having such a huge effect on people's decision to buy. And I think this previous quote from Freddie Mac says it well. It says, the U.S. 30-year fixed mortgage rates have increased 3.83 percentage points since the end of last year. That's the biggest year-to-date increase in over 50 years. So this is certainly going to make a lot of people press pause. And now the good news is that industry experts do believe that while mortgage rates are expected to continue to drift higher over the coming months, much of the rapid increase we've been seeing in rates is likely behind us. So we're not talking about mortgage rates doubling again. The Fed is making active moves to lower inflation. Mortgage rates respond. We're still seeing higher mortgage rates compared to those that we saw in the height of the pandemic, but we're not expected to see this exponential increase as we continue to go forward. Now, we all remember the crash in 2008, and it seems that many people are fearful of that happening again. But what we have to remember is that we have a very different landscape right now when it comes to inventory, when it comes to lending standards, and equity. All of these factors are driving the housing market in a different direction. Now, that data on this graph does not mean that we won't have falling prices, but it does mean that it doesn't happen every time. So when we think about what happens in the housing market, if a recession is in play, I think one thing we can learn about what history tells us is that a recession more likely means falling mortgage rates, because that data shows that mortgage rates have dropped each time this country has seen a recession. Now let's talk about home prices. Pulling data from the MLS, specifically here in Michigan, year to date, as of the end of November 2022, prices are up 6.7% from November 2021. So this is good news for homeowners there. What does this mean for buyers? Well, I think this quote from Redfin says it all. For those bearish folks eagerly awaiting the home price crash, you'll have to keep waiting. As much as demand is pulling back, supply is as well, and that's reducing downward pressure on prices in the short run. So although houses are staying on the market a little longer, we're not seeing an influx of new listings, and it's still a seller's market. And what we know is that prices are driven by supply and demand, and inventory is still low. So this is continuing to put upward pressure on home prices. But that doesn't mean buyers can't still benefit in this market, because right now there's less competition and more room for negotiation. Now, as far as the home pricing forecast for next year, here is what we have so far. So I like to look across the board at what several different experts are saying and kind of average them all out so you can see the full picture. What we can see is that some experts are projecting a little bit of appreciation next year. That's what you see in those blue bars, anywhere from 0.7% to 2.6% appreciation, while we have other experts that are predicting slight depreciation. So across the board, we have a little bit up, a little bit down, depending on how experts are looking at it. And this is nationwide. So this is where layering the data, the local data, becomes more important than ever. Some of the overheated markets are starting to see a decline where others are holding steady. As for here in Michigan, experts are predicting that home prices will continue to rise anywhere from 0.5% to 3.5%. The fact that the MLS data shows that prices are still going up, even though the number of closed sales are declining, is a reflection of a healthy housing market here in Michigan. Now, I want to touch on another perspective of this to avoid any confusion and talk about the fact that big banks are projecting more of a depreciation in 2023. And the reason it's a little bit different is because some of the big banks, they follow more of those publicly traded builders versus some of the organizations that follow more existing home sales. So big banks are calling for more depreciation based on that new build type of environment versus existing home organizations that are predicting more appreciation. But what's most important and where they all really tend to agree, and this is data from Wells Fargo, is that while 2023 may see a little bit of a depreciation nationally, as we come into 2024 and beyond, we're looking at more normal levels of home price appreciation. And as we continue to look forward, as we look at things like the Home Price Expectations Survey saying more normal appreciation in the years ahead, of course, all of that dependent on supply and demand, we will continue to see low inventory in the years ahead. But no one is calling for that extended period of depreciation right now, like we saw when we had that great financial crisis back in 2008. So, with all that being said, let's talk about that big question. Should you buy a home right now? And while this is such a personal question and it really boils down to what is best for you and your lifestyle, here's the bottom line and one way of looking at it. What's the alternative? The alternative is renting. And this slide right here shows the median asking rate going all the way back to 1988. Earlier this year, Realtor.com stated that rents across the country had skyrocketed by an average of 18% nationwide year over year. Now, while there are more recent reports showing promising signs of rent prices leveling out, here in Michigan, they've climbed 10.5% in 1 year, and experts predict that while we won't see prices go back down to pre-pandemic levels, we might see more moderation throughout the rest of the colder months, but potentially still see prices go up year after year, just at a slower pace. The biggest thing to remember when trying to figure out if you should buy or keep renting is that that big payment you are shelling out each month for rent is not going to build you wealth over time through equity. And also keep in mind that your first home doesn't have to be your forever home. So if you consider it an investment, you will reap those rewards in the long run. If you have questions about buying or selling, just go to my website at www.nikiwade.com. You can find the link in the description below, and from there you can schedule a call with me, or you can download one of my free home buying guides or home selling guides, or even connect with a lender to discuss your options. If you enjoyed this video, please like and subscribe to my channel, and thanks so much for watching.